尊敬的各位嘉宾、各位老师、各位同学，
Distinguished guests, dear professors, dear students, good evening. Welcome to the Creation and Growth of Technological Enterprises, lecture number 6. The lecture is about to start in 5 minutes. Please remain silent and also change your name to your real name in the conference room.
我们的课程即将开始，请大家保持麦克风静音。
The lecture is about to start. Please remain silent or remain muted.
Question.
各位来宾、老师们、同学们，还有
Dear
我们
guests, professors, students, and online audience, good evening.
我们迎来了科技企业的创意与成长最后一次嘉宾展示
Welcome
课
to the last guest sector of our course. And today we have Mr. Deng Feng, the founder of Northern Light. He will talk about the investment and funding of technological enterprises.
教授呢也来到了我们的课堂。
Vice Dean of our college is also here, Professor Xu Xin. Professor Xu is in charge of MBA education of the college. I'd like to give the floor to Professor Xu.
谢谢佳音老师的介绍。
Thank you for the introduction. I'd like to thank Mr. Deng Feng
身为同学们进行讲授。
for coming to
对，我这里需要您
our classroom as guest lecturer.
这个限制。
哎，好的，我们看到了。
哎，好，首先呢是特别感谢。
So again, I'd like to thank
特别高兴。
Professor Zhang for the introduction. I'm also very happy that we have again with us Mr. Deng Feng. He will share his experience with the students. How time flies. I still remember that I still remember the first week of this course. I talked to Mr. Deng Feng then, and today is the last guest lecture. So time flies, and students have benefited a lot from these lectures. We have conducted a survey among students on the effectiveness of the lectures, and the students also share with us their views of the course. We think the course or the lectures have the following three characteristics. The first is that the course focuses on comprehensive abilities and mindset of students. The course focuses on the macro trend of technological development instead of details or technological details. Instead, the course tries to understand the macro technologies or trends in technological development, and also it tries to talk about how to commercialize technology. So comprehensive abilities are one of its focuses. Second character is that the content of the course combines theory with practice. It bridges education with industry and research. The third characteristic of the course is its influence. The course is entitled The Creation and Growth of Technological Enterprises. It is listed into the global hybrid classroom of Tsinghua University. Thousands of students are able to take the course together with the students on campus of Tsinghua University. So this course spreads the spirit of Tsinghua University. Last week, Professor Hennessy, president of Stanford University, Professor Yang, vice president of Tsinghua University, as well as Mr. Deng Feng, founder of Northern Light, have conducted a dialogue focusing on leadership, focusing on how to create a startup company, bringing students a feast of ideas. According to statistics, the forum, which was broadcast in both Chinese and English languages on various platforms, it has attracted over 5,000 students and over 100,000 audience from outside Tsinghua University. So this shows the widespread influence of the course. I believe the characteristics are attributable to the work and dedication of all the professors and guest lecturers involved, in particular, Professor Deng Feng. He is our specially invited special guest lecturer, and he is involved in the development of the course, curriculum, and the contents of the course. Students are honored enough to listen to Mr. Deng Feng. You may not know, however, how much time and efforts he has invested into this course. And personally, I know that in the second week of the course, Mr. Deng Feng visited Tsinghua University in person, and he talked with Professor Bai about the design of the course and design of different lectures. I also like to thank Professor Zhang Jiaying, who is responsible for the course, as well as colleagues. I also like to thank colleagues from our MBA Education Center. Without your dedication and hard work, we cannot achieve such widespread influence of the course. So let's take this course as a starting point and try to elevate the quality. Professor Xu. There might be a technical problem.
蔡英教授要问我们往下进行啊。
好的，好的。
Should we just continue?
对，很遗憾，我最后卡了，但是。
Okay, I'm sorry, Professor Xu couldn't finish his speech, but would like to thank him for his acknowledgement and compliments for the course. So let's continue with our last lecture, and we are happy to have Professor Deng again, talking about the investment and funding of technological companies. We have audience online, and I'd like to introduce Professor Deng to these audiences who just joined us. Professor Deng started the Northern light venture capital in 2005. It manages 30 billion RMB in various industries, consumer products, medicine, biology, etc. The course, the creation and growth of technological enterprises, is actually co-started by Professor Deng. So over to you, Professor Deng. Thank you both for the speeches and introduction. So this is the sixth lecture of the course and my third lecture. This is also the last lecture of the course. We said that people, things, and money are the most important three things. The first lecture was about things, second lecture was about people, and the third, this lecture is about money. This is what we'll focus on today. Investment and financing of technological enterprises. Investment is from the perspective of investors, and financing is from the perspective of companies. So technological companies, when they are seeking financing, they need to understand how investors look at things. They need to understand the standards of investors. Before I get into details, I'd like to distinguish a set of basic concepts. Investment can be investment into equity investment, also investment into debt. So if you invest in securities and stocks, or the first sport is called equity investment, whereas a debt investment is invest into the debt. This set of concepts is different in the following four aspects in terms of risk, returns, mobility, and regulation. So investment, equity investment actually is lower in risk. I mean, it's higher in terms of risk. However, higher risk brings about higher returns. Usually, profit comes from risks. If you invest in fixed income products, you get fixed rate of return. But if you invest in securities or equity, you get the returns is not fixed. It depends on whether the company makes money or loses money. So equity investment is risky. In terms of returns on mobility, for equity investment, the quickest is that you need to wait for 5 years to get returns. In terms of regulation, the two concepts are different. Equity investment is highly regulated, and there is increasing regulation in China over equity investment. At the beginning, equity investment was encouraged by the regulators. However, now with more and more people coming in, there is about over 300 registered equity investment companies. So the regulation is increasingly stringent. For companies, what is more costly? Actually, equity investment is more costly for companies. If you have no fixed assets, it's very difficult to get debt investment. So in this situation, you can only resort to equity investment. Of course, it is more costly for you. And I've heard of stories where entrepreneurs have to use his own personal assets as collateral in order to get investment. It is not a good thing. It shouldn't be encouraged, but that actually happened in the China market. Now, private equity. Private equity is investment on the first board, primary market. I think you have heard of these terms: angel investment, or C round, A round, A++ round, many rounds of investment. Do you know the differences between these terms? I think they can divide it into 3 stages. Seed investment and angel investment are investment in the startup stage, whereas in growth and expansion stage, investment is called venture capital.
So in narrow concept, PE means, private capital, private equity. So this concept was introduced from abroad. So PE also includes acquisition and merging. So the major difference amongst all of these is the amount of investment, the stages of investment. When they go into the secondary market, it is no longer focused on what they were doing in the primary market. So maybe you are aware of these differences. So there are differences in terms of the stages of the investment. So for PE, ultimately speaking, for investors, basically you are allocating assets in different forms. You may have some fixed assets. You may basically, it's a kind of allocation of fluid asset. It has a long return, but it's also a long-term investment. You can't expect return for every couple of years. So the benefit for investors is high return, but it's a long-term investment. For enterprises, through this kind of investment, they get funded, they get financed for their R&D, for marketing, for promotion of their business, so that they can accelerate their business. At the same time, they will have access to a lot of very rich resources. Because also, as a result of this kind of investment, you will set up a board of directors. This will contribute to the corporate governance. For the overall society, why are governments so supportive of PEs? Because from the perspective of the whole society, this way of investment really attracts all kinds of resources so that they are gathered, they are drawn into excellent production forces, and this contributes to the overall development of the society. Well, then what is the business model for this? So the investor, through investing in a particular physical economy, in a physical company, this company grows and grows. Maybe this company will be sold in the future, and maybe they will go public. The valuation will be improved. And then when these investors exit, it will have a very good return. So this kind of investors are LP, limited partners in a PE fund. So what's a GP? GP is a general partner. They manage the funds. They charge management fees, and they benefit from charging carry. So let's just say you have 100 million fund. There is a management fee, a percentage of fee every year. Then this percentage range, maybe from 2 to 2.5%. Then later for PE management, the management fee may be 0.5 to 1% of the overall fund, because the fund is much huger. Then the carry is really a kind of percentage of the money you make with that fund. However folds your fund may multiply, you will benefit from 20% from the capital increase. But if you do not make as much money, you will have a hurdle rate. Then let's just say if I can only make 8% of revenue increase, then investors will not be able to have carry. So how do we judge whether a fund is going well or not? The first is IRR. So you understand this concept. Basically, it is a kind of investment return that takes into account of time cost. Another thing is called a return multiple. Let's just say the fund is 100 million. Then when this is settled, when it's liquidated, the more multiplied it is, then the better return it is. And LP is more interested in DPI. Sorry, the Chinese here, there's some mistake with the Chinese notes here. Basically, it means the distributed returns to investors. So LP will be focused on how much dividends, how much return they will get every year. They will not wait for 10 years to be compensated for their investment. So DPI is really the actual amount of return that you have every year. So three kinds of, these are very different concepts that different kinds of funds will pay, or investors will pay a different kind of attention. So you look at IRR, you look at return multiples, you look at DPI. For example, for VC, investors were really focused more on return multiples. For IRR, most of investors will look at it, especially at the early stage of a fund. We have all heard about angel investment, VC and PE. They, happen at different stages of the development of a startup. What are the differences? They differ in terms of the way the investment is made, in terms of the amount of return, in terms of the skills it takes. So I won't go into details. Maybe we can, if you have any detailed questions, we can do this during Q&A. So the earlier the stage, then the more attention is paid on people, on talent, so on your individual network. So at the earliest stage of investment, you rely on your friends, you rely on your family for investment. For later stages of development, really focuses more on the finance, on the market, on the trend. So at the early stage of the development, you look at the possibilities, you look at the trend, you look at the ceiling of the industry, of the development, of the growth. But towards the later stage of the investment, you look at data, you look at the capital market. So fundamentals are very important for the early investment, technologies, people, then capital market really is the most important consideration for later stage of development, later stage of investment. People will see that whether this company will have an unmatched strength and there is no obvious weakness. So there is a higher rate of success or possibility of success. So at different stages of investment, the focus will be different. So you can see that for the early stage, you will see whether your return can be tenfold or even higher. More attention is paid to the number of multiples of return. As for the later stage of the investment, you focus on whether this company has a very big and obvious weakness, which will prevent it from being bought or being acquired or going public. So for an early stage investment, you look at the return to see how many multiples of return there can be, the multiples of your principal investment. So there's no saying that which is better. For later stage investment, for PE and etc., the scale of the fund is much bigger, while as for early stage of investment, money involved is less. So for a bond investment, really it's about interest and etc. For PE, you make money with money. So at the earlier stage, you don't make money with money. You make money through innovation. You don't make 10 with $1. You try to make $1 out of 10 just with your technology. So there's a difference there. So for VC, some people say that it started towards the end of the 1990s. Some people say that it is started around 2004, because in that year, a VC from United States visited China, and then they brought in a lot of possibilities. So my own business was one of the part of that American delegation to China. So VC's development basically copied its development in the US. Globally speaking, VC really plays a very important role in technological development in Indonesia, and its role is becoming bigger and bigger. For VC, it plays a decisive role in the speed at which a startup develops. In the past, we can call that the times were ones where big fish eats small fish. Well, as today, nowadays, we are at a time when fast fish will eat slow fish. Really, the speed is the key to one's survival. And also, a huge amount, so this VC also is very important in helping you to set up barriers. So that, for instance, for Meituan, through subsidy, for Didi, they very quickly use the investment to set up barriers to prevent other players from coming into the market. And another thing is that VC will help companies to set up their corporate governance. So standardization, governance, especially for a company to go public, you have to be very transparent with your taxation, with your financial statements and etc. So we have some stock owners of preferred stocks. They may be minority stockholders, but they still play a very important role in terms of corporate governance. And then also, if you have a very good investment from a very strong VC, that's a very good vote of confidence. So if you are in capital market, the market will have better faith in the standard operation of a company if there is a very credible and investor involved. So when we talk about VC, we have to talk about its development in the United States, where this thing really was given birth to, right? So at the earliest stage, it started in the 1960s.
这对老牌的美元基金都是我们的这个应该叫这个 sponsor， 或者叫我当年成立这个基金的时候，这2家公司联合起来支持我。我们找 LP 啊，所以我们这个成立这个北极光基金第1期的基金呢也很顺利，就是因为这2家。这个后面就发展像很多有名的，像 Excel 啊，大家可能现在也知道什么 A16Z 啊，这个还有一些新的就是专业化的基金啊，就是专门投这个医疗健康的等等等各种各样的，对吧？那Y Combinator 也是很有名的，做这种天使啊这种的投资啊，大家可能知道这个情况。然后有很多的这个公司耳熟能详的名字，从最早的 HP 开始，后来的
A lot of companies like Intel, Apple, Microsoft, these well-established companies, to Yahoo, Amazon, and other companies, they have all received venture VC investment. So I dare say without venture capital investment, there is no Silicon Valley. Without VC, there is no global technological innovation. Stanford University, VC, and the high technology investment in Silicon Valley, all 3 things contribute to the success of Silicon Valley. And also because of the success of Silicon Valley, because of the science and technology innovation, Stanford University benefits a lot, and it is one of the universities most difficult to get in. Now this chart shows on the right-hand side the top 10 companies in terms of market value, market evaluation in 2007. Most of them were energy companies, except for Microsoft. Well, if you look at the left column in 2021, except for Saudi Aramco, the rest are all high-tech companies, including Tencent, Alibaba, and a Taiwan company. So you can see these changes are quite interesting. Of course, the ranking of the companies changes, but one obvious trend is that technology companies are becoming more and more prominent. Now, come back to China. China is now the 2nd largest country in terms of VC. Even though the history of VC is only 15 years old, starting from 2005. IDG was actually the first, but back then, at this beginning, it was a company, not a VC investment, not venture capital. Professor Cheng Siwei did a lot in pushing venture capital in China, and a lot of foreign capital came in, foreign investment came in. Between 2007 2008, and you may have heard Redpoint and other VC. IDG then became VC, and then in 2009, China's Growth Enterprise Market, or Chinext, was officially launched. And you can see the curve showing that the volume of investment by VC has been growing. And in 2019, Star Market was launched. And then because of the 2020 pandemic, COVID pandemic, the investment came down, but in 2021, it bounced back very quickly. So there is a saying that the number of investors is actually bigger than the number of companies. Here, I'd like to show you some statistics. All over the world, in particular in China, VC is now in its best of times. You can see that in America, the year-on-year increase is 75% in terms of the amount of money, whereas in China, the year-on-year increase of investment is 50%. Here, you can see in the first half of this year, it grows by 77.7%. I mean, RMB denominated fund. Whereas for US dollar denominated fund, the year-on-year increase is 222%. It shows that there is the rebound from the pandemic. It also shows that dollars are very confident in China market, which is why they invest a lot. Here is the cases, the number of invested companies, as well as the total amount of investment. Again, year-on-year increase of the number of investment cases is 18%, and the amount of investment is 70% year-on-year increase. Now, what are the targeted industries of VC? The internet has been receiving a lot of investment over the years. And in today's ranking, the internet actually is number 4. And the amount of investment it receives stands at number 4. So overtaking the internet, IT, biotechnology, medical care, healthcare, semiconductors, and electronic equipment or devices are number 3, are the first 3 receiving the highest amount of investment. Semiconductor in the last few years has received a lot of investment, and you can see the number of companies or cases invested and the amount of investment stand at number 3 and number 4. IT, of particular note is IT, corporate softwares, infrastructure, as well as application. They receive a lot of investment. And the year-on-year increase in IT, of VC in IT, is 47.9%. Then you can see that chain stores and retail sales year-on-year increase is 129.6%. And for equipment manufacturing, the year-on-year increase of investment received is 104.7%. This shows that over the years, these industries are quite popular with VC, especially industries that used not to be popular. You might think that industries receiving a lot of investment may have bubbles. It's not necessarily true. It might be because in the past, they didn't receive much investment, and over the recent years, they suddenly receive a lot of investment. It doesn't mean that there are bubbles in these industries. Now, the exit market or the exit mechanism over the last 2 years, because of the worsening of geographical or geopolitical circumstances or environment, and also because of the pandemic, the environment for Chinese companies to be listed in the American market has worsened. Of course, in China, there have been changes, and a lot of medical companies wish to get listed in the Hong Kong stock market. And domestically in China, GN market and STAR market exhibit different speed in given approval, and there are different fluctuations, but in general, overall, I'm quite confident in China's market, and China is constantly readjusting itself, adapting itself to changes, and these changes are actually good for technological companies. Beijing Stock Exchange, which was recently established, wishes to become China's Nasdaq, trying to attract companies in the niche market, technological companies. So I believe this is a piece of good news for VC and PE. And also there are new regulations launched for the reduction of holding and so on. So I've covered VC capital, its history, its business model. Then what should we do? What do we do in practice? These are the few keywords in practice, or the 3 procedures in practice. The first one is financing or raising funds. Second one is investment. Third one is management. And the fourth one is exit. I'll focus on the first 3 of the keywords. Okay, first, fundraising or raising funds. You need to understand who your investors are. For RMB denominated funds, investors are usually individuals. One possible risk is that these individuals may not have capital as time goes by. So you may need to constantly look for new investors or raise new funds. And individual investors focus on DPI because they want returns and they want quick returns. Whereas institutional investors, they aim for long term and they have constant supply of funds. Good news is that RMB denominated funds are gradually moving to institutional investors instead of individual investors, including banks, insurance funds, and other institutions. So more and more insurance companies and some listed companies, real estate companies are getting into VC. And for foreign investment, funds come from foundation. The Ivy League universities, Harvard, Stanford, and other universities, they have their foundation, and quite a large proportion of their foundation are channeled into investment. For Northern Light, our investors include Pennsylvania University and other two universities. Another part is family office. Family office investing in venture capital. Family office is not seen or is not very common in China. Actually, Tsinghua University has its foundation as well, and Tsinghua University Foundation started to move into venture capital, and I believe in the future, more and more universities will allocate part of their foundation into VC.
So many skills are involved in raising fund, but this case is really not about skills, but the key is really what kind of, let's just say, people you want to be your LP. You hope that you want to find someone who will be a long-time partner for you. So you want to find someone who shares the same kind of ideas with you, who will be there for you, will keep your company for a long way to come. So whether you will be given a lot of freedom, etc. The same applies with VC. So for VC investors, what kind of companies do you want to invest in? So it's like choosing a race course. So in the past, you think about, you try to pick the low-hanging fruit. But actually, the low-hanging fruits have already been picked nowadays. And the easy praise are gone. So your mindset has to change. You have to really be more dedicated. In the past, you can have a very general approach towards investment. Now you'll have to be more specialized in your approach. You have to be very much intensive in this investment approach. So as I mentioned, for VC investment, you do not expect to make money with money. But really, what industries are the best, your choices? The ones that are light in asset. Let's just say real estate industry is definitely not asset light, right? For agriculture, they're not something that the VC will go in. Why does VC likes to go into technology? Because it's an asset light industry with high growth possibilities and perspective. So the analogy between a race course and investment is really, or an investment things may not be a perfect analogy. So if we use this analogy anyway, you want to choose a race course that is both long and wide. For example, for health. When I just came back to China, I wanted to invest it in corporate software. And I think I thought at that time that consumption internet is really very wide, was a very wide, long race course. In 2011, I started to be focusing on health, right? So if you do not have that kind of DNA in your company, how can you invest in this industry? Maybe I started with the investment in the tech industry, but at some point in your development, you have to look at the trend of the development. If a race course is long and wide, even if you don't have the DNA for it, you can recruit people who have it, right? Who will help you to learn fast and for you to go on the track and compete on that race course very fast. So it is important for you to choose the right race course, race track. So sometimes journalists, they would ask me, what are you interested today, or what will be interested tomorrow? So you cannot just invest in an opportunity which is already a very hot opportunity that has received a lot of attention. You want something that will be put in the limelight very soon. So as I mentioned, we need to focus on the long-term development instead of what is currently hot. Maybe what you are investing is not very hot currently, but it will be maybe in 6 months, and that is what you want to do. So you have to be visionary. You have to be more forward-looking. If you look at the past years, there are many hot opportunities. You have internet, health, and variables, etc. The boom has come and passed. Maybe people are saying AI is a new opportunity now, but when you realize something is the opportunity as everybody else, then it is no longer an opportunity, because the hot opportunity nowadays may not be one in 5 years. So we again have to look at long-term development, look at the trend, look at the trajectory of the development. So this is our approach towards investment. We do not look at what is popular now. We look at what will be popular in the future.
那除了这个行业，我们什么样企业好企业呢？除了这个市场，其实市场跟行业某种上有相关性嘛，因为你在哪个行业，在哪个地域，它面对。
If you look at the markets, you look at consumers, etc. I think we mentioned a lot of these in the first and second session. You look at the ceiling, you look at your compatibility in the market. Do you have things that you have monopoly over? Whether you are in the first tier of leading companies on the market, etc. The second thing is about team. So team of founders, right? So and then you look at innovation. You have to be focused on barriers-oriented innovation. If you do not have barriers for your business, then that innovation will not be able to be defended. So for each kind of innovation, they have to have barriers. In terms of business models, when we look at feasibility report, you look at these 3 words. You look at the scalability. You want to make money, but you want to make big money. So whether you can achieve scalability in your profitability. If you cannot realize that, then you do not want to invest in this. You cannot just think about how much money you can make today. You have to think about how much money you can make in the future, and you have to make and also in terms of your investment, you have to invest in a business that can be sustained and that can be defended. So if an enterprise, if a startup has all these 3 elements, then it's a good investment opportunity for a VC. then how do we look at entrepreneurs? What kind of entrepreneurs are good ones? Or if you want to be an entrepreneur in the future, what kind of qualifications, what kind of characters do you need to have? So I listed some of those things. It took me maybe a couple of minutes or even less. So it's very difficult for one to be all of this, right? So the entrepreneurs we have invested maybe only will see success for half of them, right? If you are a tech expert, you specialize in technologies, but you may not have very acute business intuition. You may not be very good at dealing with the governments. You may not be able to deal with the capital market, etc. So when we try to choose an entrepreneur to invest in, of course, there are many other things to be included here, IQ, EQ, characters, etc. So what do we focus on? We look at a person's experience and experiences. These two are very important in the tech company. Experiences of failure is actually a bonus when it comes to your attractiveness to an investor, right? So we of course we look at their track record. Of course, we can't choose a serial loser. Maybe bad luck is following that person. But if that person has experienced some kind of failure in their life, in their development, which is good, right? Which will build his character, which will add more new intuitions and insights to that person. Let's say for a person, is he a quick learner? Can he quickly learn? If he's not a tech person, can he learn something about the tech related issues very quickly, etc.? So learning ability, the ability to learn, is also very important. And what is more important is your values. Ethics, right? It can be said to be part of your set of values. These are all very important. And then, of course, leadership is one of the most important things. We had a discussion, we had a session on leadership, right? And really, leadership, a leader has to go beyond the target of achieving financial returns. You have to have a strong sense of accountability and responsibility. You have to have grit. You have to have perseverance. You have to be resilient. You have to be very generous and a broad vision. This will decide whether a business will go far. So for a lot of people, they want to invest in a business. So how do you make your judgment? How do you make your decisions? I am often asked these questions, especially for early stage investment, which, by the way, you may have noticed that this is already now very popular amongst the investors. Because compared with the mid-stage or later stage of investment, it requires a higher level of specialty and professional judgment. But if you do it well, you will be rewarded with high returns and higher status in the industry. Don't think that I am better at making judgments and seeing the opportunities faster or more clearer than other people. I think for me, you still have to have access to different kinds of opportunities. And Because if you do not have this access, if you are not informed of these possibilities, then even if you have a very good sense of judgment, it will be too late very often for you. Maybe people are already in their second or third round of investment. It will be too late for you to come in.
So you need to do your due diligence or do your research in making your judgment to understand the possible investment cases. You may have information from all over the place, from different industries. So you need to really get behind the information about the cases. You need to build a deal flow ecosystem or a deal flow network, and you need to accumulate resources in terms of human resources or other resources where you can pick up, you can have access to different deals. Of course, resources doesn't mean the number of people you know. On my WeChat account, I have about 7,000 friends, and a lot of people, they mingle a lot. They try to understand different people, but what matters is not the number of people you know. What matters is the quality of the people you know. For example, of the thousands of friends in your WeChat account, if about 100 of them know what you want, know what you are looking for in terms of investment, then they can provide information, they can make recommendations to you. This is what I mean by accumulating resources. So you need to find the source of deals, identifying cases is a process. For example, we invested in a company and a senior management of the company start a company himself, then maybe we are interested in investing in him and in his started company. And this senior management might recommend his friends to us. So recommendation or referrals are important. And because of these recommendations, you may get ahead of other people in identifying worthy deals, and you can make early decisions or quick decisions. When you can make quick decisions, it doesn't mean you are smarter than other people. It means that you have done a lot of preemptive research, and it means that you are more sensitive than others. You absorb all the information that other people bring to you. So when you have a case, when you have a deal at hand, with the information, with the sensitivity, you are able to decide for a case or decide against a case. So I think in most cases, efficiency and methodology are important. For early investment or investment in early stages of a case, ecosystem is important, or different sources of deals are important. Then how can we become a great investor? Of course, luck is important. But investment, if you were lucky in the past and you had a good deal, but the next deal may not be as good as your last deal, you may not be that lucky in your next deal. That means that you need to stay hungry and stay foolish. I think this is your mindset. You need to have a long-term strategy. It is not a short-term gamble. So it's not necessarily true that you have to be aggressive. A lot of VC in China are actually quite aggressive. They take it as a gamble. But personally, I think luck is important, but accumulation is important. Your state of mind is important. How you communicate with entrepreneurs. Do you treat yourself as partners? Do you go in as partners, or do you go in as a boss or as a coach? Do you respect entrepreneurs? Do you take a mutual respect approach when you deal with entrepreneurs? So that's your mindset. Second, methodology. The methodology you adopt in studying the market, in judging the mega trend. And the third is accumulation. I talked about this. For example, your business acumen, your business sensitivity, your ability to identify a deal, and your ability to serve the companies. For me, I think the most important thing to accumulate is your reputation. That means over the years, you are building a brand, and the market knows you as a brand, and you have successful deals and cases in different industries, and this helps building up your brand. So I think as investors, you need to have a long-term winning strategy. It is different from business management. Business management is day in, day out. You work hard every day. But for VC, for investors, it is a long-term business. And you can be in this business for the whole lifetime. Most people in VC are very happy with their lives or are very excited because they are always in the frontier and they are always in the knowledge of different fields. They understand business deeper and wider. So they think that this provides them with fulfillment. Also, as an investor, you set up long-term partnership with your investees. It's like you fight the same war. It's like you provide the most needed resources when those resources are needed. And because of such a relationship, you've become partners with the managers or with the entrepreneurs. And for me personally, I've become private friends with these entrepreneurs. So I think VC is not only about financial returns. VC is about fulfilling your life's value. And I would be very proud when I talk to my grandsons or grandchildren that the companies I've invested in are still around, like Meituan, or companies they have grown and become top 500 of the world. So this makes me proud. And I feel that I have fulfilled my life's values. It gives me a sense of fulfillment. So I hope that when I retire, after I retire, the companies are still around, the companies are still making money, and their shares are still quite strong in the market. So this is what I think as a VC investor, or this is my understanding of investment. You may be wondering, can you share with us some cases or successful cases that you invest in? Northern Light has invested in a lot of companies. We focus on big racing track. One is science and technology innovation, tech. Second is healthcare or Medicare, and third is consumption or new consumption mode. So we focus on the three big fields. I didn't put 5G there, but I put in chips, AI, IoT, robotics, digitalization of companies, and cloud computing. And in Medicare and healthcare, biopharma is very important. And then diagnostics, equipment, medical devices, and digital Medicare, or new types of medical services. Digital Medicare also includes AI or AI-based diagnostics. The last box here is new types of medical services. Actually, digital Medicare is regarded as medical services. Now, in consumption, we are looking at internet-based insurance. It can be categorized a kind of service. New brands, domestic brands going abroad. So Chinese suppliers have become a global brand. We are no longer a manufacturer or a workshop for the world, and gradually we are going global. We are creating our own brand and providing services. Cars are on the one hand based on science and technology innovation, but on the other hand, it means a new type of or new mode of consumption. So this slide covers 80 or 90% of the recent tracks of VC in China. Some of the boxes are quite popular. For example, corporate digitalization, chips, AI. They are quite popular. You may think they are even overheated, but I think we need to take each case separately. Because even in chips, maybe in some fields, they are overheated, but in other cases or in other fields, chips are still worth investing. So you need to judge on a case-by-case basis. Then how do you evaluate a company before you decide to invest in it? I think broadly, it's mutual consent. You may calculate on the basis of DCF or PE or other statistical indicators. But for early investment, there is no revenue, there is no profit. Then you may need to look at other companies in the same category, or if there is no similar companies, you may need to look at competitive companies. Or even without competitive companies, you need to really estimate. estimate and understand the rule of development, the law of development of that industry. But please remember, if it's a good company, estimation is not that important. I think you need to consider the return, whether it's return by 10 folds or 30 folds or 40 folds. A lot of angel investors, they invest in a wide portfolio of companies. And they invest in too many companies. It means that they are not able to establish connection with the entrepreneurs. And it also means that they cannot get a big share of the stocks when the companies are listed. So my personal suggestion is that you invest in a limited number of companies, but you take a slightly bigger share or proportion of the shares of the company.
Just say you have $100 million dollars or yuan, you have to have a portfolio, right? You can't invest all of your money in one company. You have to have, let's just say, maybe a dozen or even a couple of dozen or even 3 or 4 dozens of companies in your portfolio for a bigger fund. You cannot put all your eggs in one basket. For early stage investment or for early stage VC, the risks are high. But if you do not have enough number of companies in your portfolio, then there is a higher chance that all of your investment will fail, right? So there has to be a certain number of companies in your portfolio so as to distribute the risks, even though that each individual case may be high risk, and that will also bring about high return. Maybe let me also give you some examples. A lot of people say that an LVC is actually a tech investor, right? Maybe you know a lot about technologies. You have to be like an expert in the technologies. You only invest in the best possible technologies. But actually, in our sessions, I've been stressing that for tech companies, we should not attach too much importance to the importance of technology, because market is more important. I'm not saying that technology is not important, but you have to have innovative and differentiating technologies. When we make investment, we have to really be oriented towards application scenes. Let's take AI for example. We know that you have computing power, you have data, you have algorithm, etc., and then applications. So for investors, maybe an AI can look at an X-ray film and then to make diagnosis whether you have tumor or not, or you have facial recognition, etc. So we had a conclusion from early on: when you invest in AI, a read algorithm does not pose any barriers. The words related may be very fancy, but these are all very apparent. These are all transparent. So it takes some PhD holders very short of time just to figure out an algorithm by referring to open source data. So many other things are more important. Just algorithm alone will not solve the problems. Computing power is built with a lot of money, right? You want to have a computing power network. It's really money consuming. It's not something for VC. Data, you have to look at whether these are proprietary data or a public data. Or if it's data is public, then everybody has access to it, right? So just take AI for an example. If we look at it as a racetrack, we have to look at its applications. What kind of problems does it propose to solve? Let's take X-ray film as an example. You have a very good algorithm, you have very high accuracy, but actually the X-ray technician may sometimes hold the film in a wrong angle, or a lighting is not correct, etc. So it will really affect the end result. So algorithm really plays a limited role. So you may not have a very sophisticated algorithm, but it can address a lot of the problems with regard to some of the application problems. For example, the lighting, so you need to have AI plus LT plus LT. You have to have access to your own proprietary data, because only proprietary data has value because you own them, right? So for AI, the most valuable thing is data. If you have proprietary data, it is really definitely highly relevant to certain applications where you can extract more proprietary data. So I use the example to say that we don't just pay attention to technology, we really pay attention to how technology is applied. Now, a lot of people ask me, how do I view metaverse, right? I don't want to spend a lot of time on this. So, metaverse, there are a lot of things to look at. You have underlying technology, you have hardware platform, you have systems, OS, right, and then software, and then applications. So if you just look at those hardware, software to B2C, and these different kind of mixes will generate different kind of opportunities. Even just for a goggle, right? There's AR, VR. For softwares, you may have entertainment oriented or social softwares. Your 3D avatar, how do you realize their expressions and language processing, etc. So all of these examples are here to say that in terms of hardware, in terms of software, in terms of systems, there are many different dimensions through which to look at the possibilities. For AR, you think about its applications. Maybe people are saying, oh, there has been a new AR goggles on the market, but whether this AR goggles will be mainly used in entertainment or in the scene of medical care or in industry. And then for each kind of application, how big is the market behind this application, and how do you charge for that? How much do you charge for that application? So we do not invest only because it has this concept of metaverse, or it is something that has to do with 5G. We'll have to analyze whether this particular technology or thing plays a role of a key link in that industry. Who are its competitors? Of course, you may have already some insight of the underlying issues, for example, basic judgment of the timing, etc. Then the components, then the applications might be easier for you to make judgment over. So for this slide, when you are studying a field, when you are studying a possibility, you can't just stay on the superficial level when it comes to judgment or decisions. Metaverse can take a whole day or even longer for me to explain, but that's the main takeaway. For semiconductors, so we have benefited a lot from our investment, but I have to say that the valuation is too high. There are a lot of bubbles as a result of AI acceleration. The Black Sesame, Horizon, and more, Xincheng. These are some of the startups and founded by a couple of people, and their valuation can be up to $1 billion. So valuation is too high, too many bubbles. Of course, that's only my personal view. Because I have already many years of experience of investment in this semiconductor industry. So if we don't just follow what is popular, you will know that we import $800 billion worth of it's $200 billion worth of semiconductors every year, more than the value of the worth of crude oil we import every year. So chips for clocks, we introduce basically all the semiconductors used in this, in those products. Right? For a lot of the variables, the chips are also imported. A lot of things in cars are imported. So we have to take that into consideration. Not everything semiconductor related is suitable for VC. A lot of the opportunities for VC is in the design aspect of semiconductors. Of course, there are other possibilities, materials, processing, techniques, or design software. But not all of these are easy to invest in. Foundries, I think the easiest aspect of semiconductors, the easiest opportunity for semiconductor-related investment is perhaps in the design stage or the design aspect business. If we look at the advanced manufacturing, people talk a lot about digitalization of the manufacturing. People may say that, there are a lot of opportunities for investment in this area, but we have to be careful. We have to take caution. For advanced manufacturing, it's a very big concept. There are many sub-sectors, and the development for each of these subsectors will vary. It has come a long way through mechanization, through electrification, to automation, to informatization, etc. A lot of the manufacturers or a lot of the development is still at the stage of automation. In the past few years, we have seen a very rapid development for robots. A lot of people born after 1980s or 1990s, they do not want to do the job of coding and other jobs because these are bad for your health. And these jobs can be done by robots. So the focus for a lot of enterprises is still at the stage of automation. And there are a lot of small and medium or macro level of enterprises. So smart development is not their priority. They still have to scale up, right? Scaling up is still their priority. Let's just say, take pig farming as an example. If pig farming is still done by individual farmers, this is very difficult for them to scale up their business with information technology, with smart technology, right? They still have to scale up. So for to be business, it's not winner takes all. And to be is not developing very fast. I used to say that the decision makers and the investors, very often they look at different things. For to be market, really a lot of the deals are made based on so-called 关系 or relations. And it's very rare to see winner takes all in this kind of market. Otherwise, unless you have monopoly over the market. So to B and to C investments are very different.
And I think you need to focus on either to B or to C. It's difficult to be good at both to B and to C. For me personally, I don't think I'm very good at investment to C investment. Now, biopharma, things are really changing really fast in this field. Popular stuff a few years back are not popular anymore. For example, 3 or 4 years ago, targeted treatment of tumor was very popular for investors. But then a few years later, it has become Red Sea with fierce competition. So biopharma, it is a rapid changing sector. 10 years ago, most of the drugs were Me Too drugs, and then better drugs. And then FIC drugs, first in class in China, and then you need to be first in class in the world. And then drugs in the past were small molecule based, and then it moved to antibody based drugs, and then ADC, RNA drugs, and then gene treatment became popular. For example, CAR-T and UCAR-T. These different names represent different technologies. So the issue now is VC investment cuts in when the technologies themselves are not mature yet. Because of capital investment, the biopharma development in China is moving very fast. And because we have advantages in clinical resources, but again, China cannot compete with the US in terms of research or biopharma research. So all in all, investment in biopharma needs to take a long-term perspective or long-term view. You should go beyond revenues or profit or returns of the recent 1 quarter or 2 quarters. You need to take a long-term view. Now, bioscience tools. Manufacturing in China is very strong, and the iteration rate is very fast. And in bioscience, you can see rapid iteration of the devices or the tools in terms of sequencing, in terms of PCR device, or even the collection, sorting, and analysis of cells. So the tools or devices in biosciences are iterating very fast. In many fields, China is going very fast. So in understanding the industry, you need to understand both China's advantages as well as its position in the global market. You should not focus only on the company itself, on the revenue or profit. You need to take a long-term and a broader view. Of course, for early stage investment, you cannot wait until everything has become clear before you make a decision. This case is called hardship bot. It mainly tries to meet demand for companionship. We were not sure whether such a robot can provide companionship to human beings. This robot doesn't look like a dog. Does it have to look like a dog? How can it provide companionship? Should it talk? Should it be smart from the beginning, or should it become smarter and smarter? And how should it walk? What are the expressions should be like? What should the expressions be like? So all these questions need to be answered. For VC, you cannot wait until every question is answered with a clear answer. You need to see the mega trend. You have to agree with the major idea. So here, HachiBot provides companionship rather than services for people, especially senior people. Companionship is even more important. Then what about timing? We invested in HachiBot 2 years ago. We believe in 5 or 10 years, a mature product will come out. I didn't expect when I invested in this company that there would be so many different types of robots. So my point is, don't wait until everything has become clear. So when you invest, you should be able to take risks, and whether your team is as committed as you are. Team commitment, team understanding of the deal. You may not be right or correct on every detail, but if you grasp the mega trend if you see or if you are right about the general direction, then it's okay to go in. So we cannot be too detail focused. So I've covered fundraising, investing, and managing. You may be wondering why do you need to manage? Being an investor, management is not your job. But personally, I think management is very important for early companies. Or I'd rather use the word helping or help the entrepreneurs. But by help, I mean you really provide help rather than provide interference or stop the entrepreneurs from doing their job. So by helping, I mean you need to provide your resources, your advantages, and also you need to help in risk control. In order to do that, you need to build mutual trust with the company, with entrepreneurs. Again, you need to become long-term partners. So how should we set up mutual trust with the investees, with the entrepreneurs, with the company is a fundamental question for investors. Otherwise, your corporation or your investment will not be successful. Both investors, entrepreneurs need to be authentic towards each other. Enterprises need help in many ways in terms of legal affairs, in finance, in human resources, and in maintaining government relations. As investors, you need to provide strategies in terms of operation. It's about empowering, and beyond empowering, you become partners with entrepreneurs based on mutual trust. Some entrepreneurs, they survive on their talent or on their values, on their capabilities. Like this afternoon, I was talking to an entrepreneur. He told me that good news is that my company will survive. I was greatly touched by what he told me, because this company went through 2 difficult years. And during the 2 difficult years, I provided emotional support. I provided understanding and empathy. And this is how I set up mutual trust with entrepreneurs. And in this way, I set up mutual trust with this entrepreneur. So I think trust, support is more important than than assistance in terms of legal affairs, finance, human resource, and government relations. But you need to be sincere and authentic. And if you're not sincere, you will be caught out. Now, I want to talk about incubation or deep incubation. What does deep incubation mean? Deep incubation can create a lot of value, and I'd like to use Black Sesame as an example. Its evaluation is $80 billion. We went in round A, and we did a lot in deep incubation. A lot of companies, we went in very, very early stage. We almost worked as a co-founder. So we helped with market research. Deep incubation is EIR, is called Entrepreneur in Residence. We work with entrepreneurs in identifying direction, in trying to develop products. However, in setting up teams, EIR doesn't work.
Maybe in the pharmaceutical market, maybe you can find some people together to do this together. But for a lot of cases, VC cannot play the role of a team builder. You may help with the direction of the development. You may help with the orientation of the future development. Maybe so. For accelerators, PMF is important. So this is something you can help, for example, with a enterprise, with a startup. Han Yusheng used to be one of my investment managers. They want to, now he works with the Burning Rocks, right? Burning Rock. So he wanted to find investment for kind of sequencing technology, but he couldn't get the investment. So he decided to start a company of his own, to develop a startup of his own, to invest in these areas. If you look at an enterprise, you have to look whether it has a weakness or a very strong strength, whether this will help you to move to go far, or it will only, the company will only see a very short life. So this direction of the market, or the direction of the company's development is very important. Now Han Yusheng is investing in a disruptive business, which will be making use of the sequencing technology as a way to disrupt traditional cancer curement. If you look at ESG, you may have heard of it. So when we invest, we not only think about return on investment financially, but we also look at its environmental, social, and government return. You have to be environmentally, socially friendly, while at the same time, in terms of corporate governance, also you have to follow standards. You cannot be detrimental to the environment. Your development has to be sustainable. In terms of socially friendly, there should be no discrimination. You cannot violate animal welfare. You cannot, for example, for e-cigarettes, whether this has a good or bad impact on the society or not, all of these things will be included in the considerations of an investor. The same is true with government, with governance. When you are going to invest in a company, when you are doing an investment, when you are developing a company, you have to look at, for example, labor relations, your management structure. You look at the remuneration system. You have to look at your customer relations. Are you tricking your customers, etc.? ESG is growing very fast. And also, the emphasis on this started in the United States. Then for LP, they are saying that for GP, there has to be some methods or approaches to make sure that you will not invest in a company that has a poor track record in ESG. We have to be proactive when it comes to considerations with environment, society, and governments. You don't just speculate. You have to, speculators very often disregard their impact on the society. So we need to see more discipline, right? Especially when it comes to ESG. I believe that a lot of graduates from our MBA programs at Tsinghua University will be investors in the future, and really hope that whatever you do, you have to ask yourself whether you can look your future generations in the eyes if you do this. So whatever you do, it has to contribute to the environment, to society, and to corporate governance. So we have to be responsible for ourselves or others, and also for the reputation of the Tsinghua University, because there's a lot of focus, right? There has been a lot of public attention towards investment and towards investors. Some people may say that we are catalysts and who are only interested in their self-interests. I'm not saying that we should no longer invest. We should no longer make use of our capital. We are doing good things we are creating values to our society. But when we invest, we really have to be more sensitive in ESG considerations. Let me give you a simple example. We need to follow ESG considerations, but there are no quantitative measurements as to see which fund is doing a better job in ESG. Globally, there is no such thing. For an LP to invest, to decide whether they want to let in a GP, they do not have a quantitative measure, again, with regard to ESGs. But they do have this ESG does take up a very important role. It does play a very important part in the decision makers of LPs. Our investors have to make sure that their investment will generate positive impact on the society. Sometimes we expect a huge amount of industry to create investment to create a whole sector. Very often this generates a lot of wastes, and this leads to a lot of vicious competition. This is bad for the society, right? So it is very difficult. I will take that ESG is very difficult to be quantified. And in different cultures, in different countries, there are different standards and expectations for ESG. How do we do a better job in ESG in the Chinese society is a challenge, is a topic for discussion, is a topic for discussion and for further and more accurate definition.
这个我就不想讲了嘛，这是卡尤底们，你们如果去做核酸检测，你可能就知道说它是这个快速做核酸的东西，这可能它作为就是 回报又好又开心。
For when we go to do nucleic acid testing, sometimes it takes only 20-30 minutes for the results to come out. And this is enabled with the technology of Coyote, I won't go into details of this company, Coyote. Right. Let's just say the main takeaways from today's course is that when we do tech investment, applications will be the leading consideration. And secondly, when we engage in early stage investment, we have to have forward-looking industry or sector research. We have to grasp the major trend for the development of this industry. Early investment is not about just invest at an early stage. It's about of a company, but at an early stage of the development of a whole industry. And another thing is when we invest, we have to choose a racetrack which is both long and wide. And we have to also focus on value creating post-investment service, and we need to grow together with entrepreneurs. With that, I conclude, and we may take a break, and then we'll come back for Q&A session. So thank you, Mr. Deng. Let's take a break for 10 minutes, and then we'll try to wrap it up at 10 o'clock. So the Q&A session will be strictly for Tsinghua students. So let's come back at 9:05 p.m. We've already had some questions from online in the chat rooms, and you can continue to ask questions there, and then we'll try to answer those questions in the order in which they were asked. Let's come back in 10 minutes.